In a recent briefing, President Trump mentioned the option of business interruption insurance policies. With the recent onslaught of COVID-19 sweeping the globe, there's been a lot of conversation about insurers providing coverage for business interruption losses caused by disease outbreaks and pandemics. Up until now, the insurance industry as a whole hasn't written coverage for this kind of situation. In fact, most policies specifically exclude disease pandemics caused by viruses. The reason is simple: the carriers would go bankrupt. Pandemic-caused losses are usually excluded from most business interruption policies. The reason is that they can affect all businesses all at the same time. Some state legislative bodies are proposing that insurance companies pay for damage during the pandemic, coverage which in most cases was not underwritten or was specifically excluded. The U.S. House of Representatives have proposed a Pandemic Risk Insurance Act, which would create a reinsurance program similar to the Terrorism Risk Insurance Act for pandemics, by capping the total insurance losses that carriers would face. Other House representatives proposed declaring coronavirus a public health crisis, and as such, a qualifying event for all existing force majeure contract provisions and business interruption insurance policies. Of course, in the middle of this outbreak, no company can go to their insurer and get coverage, although many are filing and hoping that political pressure will cause some jurisdictions to buckle to pressure. The proposals being pushed forward in New Jersey and Ohio would force carriers to provide coverage on a retroactive basis. That is likely unconstitutional, but you never know when politics is involved, and insurance is, at its heart, a regulated political product. But this is a conversation that should happen once we're on the other side of the pandemic. Right now, we have the government essentially creating and implementing a business interruption program through a loan grant mechanism called the PPP, or Payroll Protection Program. I suspect this is largely because this is the quickest way to get help into the economy. The challenge is that not only do they have to fund the program, they have to administer it as well. And the rollout has been difficult for some of the large banks particularly. The government has chosen to use the SBA to push out the program, as there are already people and resources in place with which to do so. What might be more effective and efficient is a business interruption program that's run by insurance companies but backstopped by the federal government. This way, the insurance companies would administer all the claims rather than the government having to do it.